I think Bitcoin is mistaken as a risk-on asset. I think the reality is Bitcoin, the utility Bitcoin serves to the world today is a global macro smoke alarm. Bitcoin's going to sell off. It's the only 24/7 global free market in the world. Bitcoin moves first. It's free. It's global. It's accessible.
Sunday night, no markets open, no headlines priced in, then boom, Trump hints at a third term and more aggressive tariffs. Global markets freeze. But one asset? It moves. Instantly. Jack Mallers is here to break down why Bitcoin is no longer just a risk-on asset. It's the world's only 24/7 macro smoke alarm. And when chaos hits, it signals first. In this episode, Jack unpacks why the Fed needs to ease soon, and how Bitcoin is front-running the entire financial system, why US debt, QT, and the 10-year yield are all pointing to one thing: massive liquidity incoming, and how Bitcoin's recent volatility is a feature, not a bug, because the world is volatile. Forget the noise. Bitcoin isn't reacting, it's leading. If you believe Bitcoin is the truth in a broken system, smash that like button, hit subscribe, and drop your take in the comments.
The headline was, Trump considering running for a third term, says it's possible. So that was the first headline on a Sunday night, by the way. Again, no accidents like this. Sunday night. Then he followed up, and the next headline was, I have it right here, Trump weighs broader, higher tariffs. Okay. What have we talked about over and over and over and over again on this podcast is markets do not like uncertainty. They do not like uncertainty. Bitcoin, I think Bitcoin is mistaken as a risk-on asset. I think the reality is Bitcoin, the utility Bitcoin serves to the world today is a global macro smoke alarm for global liquidity and risk. And so if on a Sunday night, the president of the United States is going to say, I might run for a third term, and then say, I'm thinking about stronger, harder, broader, all of these overpowering bully words for tariffs, Bitcoin's going to sell off. It's the only 24/7 global free market in the world where you can express a concern about macroeconomic, geopolitical relationships, about global liquidity. On a Sunday night, where else would you have been able to express a concern about what the president of the United States said? Think about that for a second. Global, free, accessible market that is the macro smoke alarm for global liquidity today. Bitcoin led the S&P 500 down. Bitcoin moves first. It's free. It's global. It's accessible. So why is Bitcoin down? Because of macro, because of Trump, because of tariffs. I expect a lot more volatility. We've said it over and over and over and over on this show. Volatility in the near term, bullish in the medium to longer term. We're still right in the thick of the volatility. Markets do not like uncertainty. They're going to freak out. They're going to sell off. And also, by the way, if you look at gold and how gold's trading, I mean, something is up. Something is up. Markets are calling bullshit. Markets are scared. Supposedly, we're getting clarity on tariffs and the policy on April 2nd, and markets are trying to price that in. Are they pricing in too much downside? Are tariffs going to be light? Is Bitcoin going to pop? Maybe. Is Trump going to be aggressive? Is he not only negotiating, but he's going to act this time? Maybe. Nobody knows. So I expect a lot of volatility. It's tariff week. Bitcoin is a global macro smoke alarm. Think about it. People say Bitcoin has no utility. What other monetary network can anyone in the world express concerns about what the president of the United States said on a Sunday night? The answer is zero. There's no such other useful asset, useful monetary network that provides you that level of utility. Extraordinarily useful. That's why it leads itself on the way down. It leads the world on the way up. Now, what I wanted to bring to your attention. So listen, my opener there, Bitcoin's volatile. It's volatile for obvious reasons, because the world is volatile, because Trump and this administration have been volatile. Policies are unclear. They've been in office for 8-9 weeks now. They're rushing policy. They're trying to front load a lot of the pain. They're purposefully engineering uncertainty. They're purposefully engineering intimidation tactics. All of this is expected. Bitcoin's going to be volatile. Bitcoin's going to trade down if the world is scared. Just a fact. Okay. What I wanted to bring to your guys' attention is what the Fed has been issuing. Because I really want to continue to build conviction in my medium to long-term thesis that Bitcoin's going to hundreds of thousands of dollars per coin this year. Okay. Just to remind everyone, or for those new listening to the show, my opinion, you take it for what it is. You could disagree. You could hate it. I don't give a fuck. You could agree with it. You could use it. I don't give a fuck. It's just my opinion. My opinion is that easy monetary policy is around the corner. I think the aggression and the front loading of pain is because there is a lot of money to refinance over the next 12 months. The U.S. government has to roll over $10 trillion. April's their biggest month, when Treasury Bessent's saying the 10 years got to come down. 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 You guys want to know why the 10-year has to come down? The 10 years got to come down because they're in so much debt. And so they're pushing. Can we get rates down? Can we get the 10-year down? Can we get rates down? Can we get the 10-year down? Think about it logically, guys. If you had to refinance $10 trillion, you'd probably want as low a rate as you could possibly get. You want easy borrowing conditions. You want easy monetary conditions. I want to show you guys a Bloomberg headline titled, "The Fed is urged to mull a hedge fund bailout facility for basis trades." Okay. As we talked about last week, the Federal Reserve came out and said they were slowing down QT, quantitative tightening. And they're starting to flirt with this roadmap of slowing down quantitative tightening to stopping it, and then picking up quantitative easing. Now, they haven't said that explicitly, but what the Fed is masterful at always is doing QE, not QE. Not technically quantitative easing, but actually quantitative easing. And so after that Fed meeting with Jerome Powell, where he said, we're going to stop QT, all eyes were on, was he going to flash any signs for QE, not QE? Was he going to start putting things out in the media and flirting with the idea of getting more liquidity out there? Okay. Stock market's getting crushed. Assets are getting crushed like Bitcoin. These guys are desperately trying to get the 10-year down so that they can issue at the long end, they can refinance all this money, and then juice this thing to the moon. Okay? It's been my prediction. It's playing out. Still my prediction.